Good morning, I'm Tim Carter. I'm Client Portfolio Manager on npower's Optimisation Desk, and welcome to this morning's market update on Wednesday the 22nd of April. So we had a bit of support in the markets yesterday as the Dutch Economy Minister announced a new full-year cap at the Groningen storage site, but actually today prices are fairly flat with the close. Main drivers today are likely to be number one, gas system is just slightly short again, around 4 MCM. Number two, oil markets have lost a couple of dollars overnight in anticipation of US crude inventory builds today. And number three, there is a few outages on the continent which might provide some tightness and flow through to the UK later in the day. Those are your main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, continue to watch for a bit more detail. So looking at the prompt gas fundamentals to start with, as I said, the UK gas system is forecast to close 4 MCM short at the moment. That comes despite slightly lower domestic demand compared to yesterday. We are undersupplied though, because there's slightly lower flows from the UK CS pipelines. Storage sites are nominating around 5 MCM for withdrawal, and there's slightly lower LNG as well, with Dragon not doing any send out today and Southhook at about 30 MCM. We are expecting another 4 cargoes into Southhook by the end of the week though, and possibly another 3 in the week after, so we could expect around 10 MCM more send out from there over the next week or two. Looking at the the production cap in Holland, the Dutch Economy Minister, as I said, announced a new full-year cap which is at 36 billion cubic metres. That's lower than the original cap introduced in February at 39, but is probably around the median of the possible scenarios that were anticipated in the market. With the H1 cap at 16.5 BCM, some people are expecting a full year cap nearer to 32. So while that does provide some support to prices, it's maybe not as bad as some might have feared. Looking quickly at the power markets, the UK system is again well supplied, peak margins at around 15 gigawatts, despite poor wind feed-in at around 500 megawatts, and solar PV is down a little bit at 4.2 gigs as well. Quick look at the oil markets. As I said, we're anticipating more US crude inventory builds today, forecast at around 2.7 million barrels. There's been further downside pressure from news that the Saudis have ended their airstrikes in Yemen, as they believe the threat to themselves and neighbouring territories has been removed. And finally, in the FX markets, the dollar has continued to struggle to recover from losses over last week, and with Eurozone sentiment out later today, we might find further support for the pound and the euro, as analysts are forecasting an improvement in that sentiment again. That's it for today. Have a great day, and we'll speak to you again tomorrow. Cheers.